We also have Mr. Mayuresh Joshi of Angel Broking, who's joining us on the phone line to analyze the numbers of Punjab National Bank. Mr. Joshi, to start with, could I have your first thought as well? Did the numbers meet the expectations?
Specifically on the asset quality, it's much better than what we were expecting, or rather what the street was expecting. So largely asset quality has been stable. Yes, I think it has been surprising on the bottom line. One really needs to understand in greater detail what were the slippages that have come through and what kind of upgrades and recoveries the bank has reported. Because in Q1, the upgrades and recoveries were on the higher side. If they were able to maintain that along with stable asset quality, I think that is where the outperformance would have come from.
What about the credit growth figures, Mr. Joshi? I mean, we're yet to pull them up, but that has been slightly muted for the bank. Is that something you're expecting to see a pickup in the coming few quarters? Or do you think some of the other, their peers like Bank of Baroda have been targeting lower figures as they look to clean up their balance sheets? Is that something you'd be watching out for?
Oh, yes, absolutely, Ritu. So again, I think if you look at the kind of asset quality pressures that these banks have faced over the past quarter, and again, the increased provisioning, that has taken a toll on their credit costs. But largely, again, I think if asset quality pressures are expected to stabilize and the kind of provisioning that one really expects on the existing loans which are going bad coming down, my own sense is that credit costs can stabilize. But again, I think one really needs to understand from the management the outlook related to stress on their balance sheets related to specific sectors. And if the stress is expected to come down over the next few quarters, the credit cost, in my presumption, can start stabilizing and coming down. But one really needs to understand that from the management commentary as well.
Mr. Ravikant, if I could bring you back into the picture, 11% credit growth in the previous quarter. What are you expecting? What are your expectations from Punjab National Bank for the remaining fiscal?
So I think they were, the bank management itself had said that they would be looking to target around 11% of credit growth for the full year. And I can see that from the preliminary numbers that are available from the balance sheet, there has been a small uptick QOQ. So, that's again, I mean, I think the credit is somewhere around 3.93 trillion compared to 3.91 trillion in the first quarter. So there is a small uptick, and I would ideally want the credit growth to sustain at a slightly healthier level. See, apart from State Bank of India, which is reporting, a low double-digit credit growth, no other public sector bank is actually reporting a credit growth. Everyone is constrained. So, sustaining a healthy momentum on the credit side is also necessary to keep the top line moving. You also need to take care of your future provisioning requirements. So I think as long as you're managing a healthy credit growth, which I think the management is trying to achieve, I would kind of be okay with it.
We also have the provisioning figure for this quarter has actually come down compared to the previous quarter where we had 2,700 crores. This quarter's provisioning numbers have come in at 2,533 crores. So an improvement there as well that's probably supported the bottom line. Mr. Mayuresh Joshi, do you believe we could take this as a credible trend now that we'll see steady improvement in asset quality for Punjab National Bank given the huge recognition it had taken in the fourth quarter?
Again, I think the hit that they'd taken in Q4 was more to do with the asset quality recognition, which largely cleaned their books last fiscal. And again, I think in terms of provisioning, yes, I think the provisioning figure is lower compared to Q1 in what they had reported. So largely, again, my sense is that if the management gives us as a commentary in respect to asset quality probably remaining stable, and again the provisioning expected to come down gradually over the next few quarters, the asset quality stress on the balance sheet that it has witnessed, I think that will come down. At the same time, I think you should also be looking at loan growth, because in Q1 on quarter-on-quarter basis, the loan growth was actually down 5%. I think it is up 3.3% this time around. So gradual improvement in loan growth will probably offset the asset quality pressures that we have probably witnessed.
Also, the fact that loan books growing very slowly is helping, the NPA numbers optically look lower, I believe. How much of a role do you think that has played in, making these numbers look better?
So again, I think if I just do quarter-on-quarter comparison, the last quarter, I think the GNPAs and the net NPAs jumped up because the loan growth itself was down 5%. This time around, I think they're being very, very cautious in terms of lending. And again, I think the granular lending towards the SME and the agri sector has been very, very slow and gradual. So in the same sense that I was talking earlier, I think they'll be very, very cautious in terms of their loan growth. The credit growth cycle should start picking up over the next 2 to 3 quarters. And as asset quality remains extremely stable, and again, I think if recoveries and upgrades remain strong over the next few quarters as well, I think the management will then aggressively start targeting loan growth in the coming fiscal. But largely, I think over the next few quarters, I think it will be a stable or a very muted sort of a loan growth, which will have some amount of effect on the return ratios. But asset quality pressures would largely start getting stabilized. So again, the management commentary thereof will be extremely important in terms of how their outlook is for the remainder part of this fiscal.
Absolutely. In fact, they have a watch list which is much smaller than many of their larger peers, even the likes of, ICICI Bank, Bank of Baroda or SBI. Their watch list stands at a mere 3,900 crores. So that is something that, of course, we'd be watching out for, the kind of slippages that came in from there. But, Mr. Bhatt, what about the watch list? What are your thoughts? The kind of NPA recovery we've seen, do you think there's been a mere, is the recognition at a accurate level, given the watch list is very, very small? What are your expectations on that front? Do we expect a significant reduction? Of course, we still have to wait for the management commentary to get the accurate numbers.
No, I mean, if not reduction, it is likely to have stayed where it was in the first quarter. Hello?
Yes.
So, looking at the provisioning number, it looks like the performance actually could have been better, because the first quarter provisions were 36.2 billion for non-performing assets. They have actually declined significantly to 22 odd billion in the second quarter. So, looks like, there's it's not likely that, significant slippages at least have happened, or even if they have happened from the watch list, then, non-watch list slippages might have been contained. So net, this seems to have, the second quarter seems to have been quite decent in terms of asset quality performance.
We'd also be watching out for the treasury gains and the kind of, input they've had as far as, profits are concerned, because that is something that a lot of banks have gained from. Mr. Mayuresh, Joshi, if you've seen the numbers, would you have those figures with you as well?
No, unfortunately, I don't have the figures in front of me. Okay. But again, I think because of the kind of fall in yields that we've probably witnessed, there is expectation that there would be some gains coming from the treasury book, specifically the AFS book. So I think one really needs to look at those figures, but I don't have that, unfortunately.
No, but going by the numbers we've seen so far, profits are improved from the previous quarter. Provisions seem lower. Loan growth has picked up. Gross NPA and net NPA ratios seem encouraging. What is the kind of reaction are you expecting from the markets, from the investors on Monday?
Well, looking at these numbers at this point of time, and though I've not looked at them in detail, I think the stock should move positively, at least in Monday's trade. And again, I think the testimony for the stock movement to gradually improve would depend on how they start showing a consistent performance in the next 2 quarters as well. And that is accompanied by what macroeconomic trend improvement we see generally. So I think the credit growth environment has been very, very soft. The expectation is that in the next fiscal, the credit growth should start improving in double digits. If that probably happens, I think the larger private public sector banks, including PNB, I think they are at least well placed in terms of their branch network and their capital adequacy, at least at this point of time, to support that credit growth. So largely, again, I think expecting a positive reaction from the stock, but I would still wait for management commentary on a lot of these aspects related to loan growth and asset quality.
All right, Mr. Bhatt, one word from you as well. Of course, optically, the numbers seem good, but could there be any negative surprises that could be thrown up?
Well, I don't know at this point of time, but overall, I would rather be cautious, given that in the past we have had, instances of 2 consecutive quarters of good performance, followed by, a quarter of bad performance. So, it's been pretty roller coaster in the past. So, numbers overall for second quarter look to be quite decent. But I won't rush into declaring that things are now on a consistently improving stage. So let us wait for another 2 quarters as well. But that said, I would keenly look forward to what management actually has to say on the efforts being made on the asset quality side.
But largely from the public sector banks, are you expecting a better performance than the previous quarter, at least given a bulk of the pain has been recognized?
Yes, but then I don't think central bank numbers yesterday were exactly encouraging. So I mean, if you are if you are referring to just top 4-5 public sector banks, when we say public sector banks, and by that I mean SBI, Bank of Baroda, Bank of India, PNB and Union Bank. So PNB already we have a decent number. So from the other four, I think I would expect the numbers to improve QOQ.
Well, Mr. Mayuresh, Joshi, one last word from you as well. What are you expecting from the other public sector banks? We've seen the private sector banks. Axis Bank, of course, was a big surprise there. Anything like that you're expecting from the public sector banks?
Well, again, as Ravikant was mentioning, I think the reporting of numbers specifically on asset quality have been extremely lumpy for all public sector banks. And for a larger picture to get cleared in terms of how the consistency will come through, I think you still need to give them at least a couple of quarters. So in that sense itself, I think a few banks, including the larger ones, might report stable asset quality numbers, soft credit growth numbers. But the mid-cap banks is where I think the lumpiness might still continue. I think a few banks might probably gain from the treasury component, and valuations might look extremely attractive. But capital adequacy remains a huge issue for them. So I think sporadically, I think you've got certain pockets of concern still persisting within the PSU space. So my own sense is that one really needs to at least give it one more quarter to understand whether the trends have changed, both from a macro as well as a micro perspective for the PSU space.
All right, Mr. Bhatt and Mr. Joshi, thank you very much for joining us and analyzing the numbers of Punjab National Bank. Shruti, over to you now.
All right, Ritu, thank you so much for all the details. The numbers look good, beating all estimates. Time for a quick break. PNB management will be addressing the press any minute now. We'll be back in a minute.